Hello everyone, welcome to EPK Capital. Here we simplify investment and wealth management so you build wealth for generation. This is the day the AI rally finally cracked, marking a fundamental repricing of risk across the market. This Sell the News event, which many have anticipated, has arrived, taking the entire market down with it. The carnage was centered, as expected, in tech. The NASDAQ composite was the epicenter, plunging 2%. A 486-point drop, to close at 23,348. The S&P 500 was dragged down with it, closing at 6,771, a sharp fall of 1.2%. Now look at the Dow Jones. It was still deep in the red, closing at 47,085, but down only 0.5%. This is a critical divergence, indicating a clear, rotational route out of high-growth, high-multiple tech and into cash and safety. The contagion was already visible during the European session, with the FTSE 100 closing down 0.9% and Germany's DAX falling 1.4%. As we speak, Asia is following our disastrous lead. Japan's Nikkei is gapping down, falling 2.5%, and the Hang Seng is dropping over 1.1%. This has confirmed itself as a global risk-off event, impacting markets worldwide. So what was the trigger? What lit the fuse for this great AI sell-off? Look no further than Palantir, ticker PLTR. This is a classic by the rumor, Sell the News event. Palantir actually beat on earnings and revenue, yet the stock collapsed 8%. Why? Because their guidance, while strong, wasn't godlike. AI stocks have been priced for pure, unadulterated perfection. Anything less is now seen as a catastrophic failure, and this was the crack in the dam. The rest of the sector followed immediately. Nvidia, the king of AI, fell 4%. AMD dropped nearly 4% ahead of its own earnings report. That is pure fear by association. We saw full-blown liquidation across the board. Micron down 7%, Intel down 6%. And then there's Tesla, which tumbled 5%. This was a double hit for Tesla. First, it was sold off simply because it's a high-growth tech name. But the second hit was more significant. Norway's massive sovereign wealth fund publicly announced it voted against Elon Musk's $1 trillion pay package. This is a major corporate governance showdown, adding immense selling pressure to an already vulnerable stock. So where did all that money go? This is where you see the real fear trade. First, it fled into the US dollar. The dollar index, the DXY, topped 100 for the first time since August. That's a classic flight to safety, as investors seek stable assets. Second, investors fled to bonds. We saw heavy buying in treasuries, which pushes prices up and, crucially, pushes yields down. And finally, look at the fear gauge. The VIX exploded higher, climbing 11% to trade above 19. This isn't just institutional hedging. This is real, palpable fear entering the market. Adding to the uncertainty, we had noise from political and central bank figures. In the United Kingdom, Chancellor Rachel Reeves made headlines by explicitly refusing to rule out tax hikes in her upcoming budget. That uncertainty hit the British pound and added to the negative sentiment on the FTSE. Meanwhile, in Japan, we saw the classic verbal intervention. Finance Minister Katayama issued a stark warning about rapid currency movements. This was a clear shot across the bow at yen weakness, and it worked, at least temporarily, strengthening the yen. Now, let's talk about crypto. As you would expect in a true risk-off panic, the cryptocurrency market was absolutely crushed. Bitcoin tumbled hard, breaking a key psychological level, briefly crashing below $100,000. That move triggered a massive wave of forced liquidations, cascading the price even lower. Ethereum followed Bitcoin right off the cliff, falling sharply to $3,500. Let me be clear, this is not a crypto-specific problem. This is investors dumping their riskiest assets first. When panic hits, high-growth tech and crypto are the first to be sold. Those recent ETF inflows we saw, they've completely dried up. So what's next? What am I watching in these volatile times? All eyes are now on AMD's earnings, which are due after the bell. If they also disappoint on guidance, this tech rout could get much, much uglier. The other key data point is the US ISM Services PMI. For months, the market has been ignoring macro data in favor of the AI narrative. That narrative is now broken. Fundamentals are about to matter again, and they're about to matter a great deal. My message to you is simple. Be cautious. Be defensive. The easy money in AI is over. This has been your daily market briefing. Subscribe, stay informed, and stay ahead.